Oh, Good afternoon, everyone. Welcome to the Joint Standing Committee on Taxation. We are going to continue to hear about tax matters as specifically relates to federal tax conformity this afternoon to continue our work from this morning when we were meeting with the Appropriations Committee. But since we're back in our home turf, feeling good about that, being back in this space, we will do committee introductions again. My name is Nicole Grahowski. I represent Senate District 7, which is 22 communities in Hancock and Knox counties. And my shout out today is, and also my excuse for leaving appropriations a couple times is I do have, or did have some members of a local Girl Scout troop visiting today. So shout out to them for making the trip to Augusta and learning about the 3 branches of government in order to earn their badge.
Good afternoon. I am Representative Dan Sayre, the House co-chair of this committee, and I represent House District 135, which is the greater part of the great town of Kennebunk.
Good afternoon. I'm Ann Matlack. I represent House District 43, which includes the communities of Cushing, Thomaston, South Thomaston, St. George, and part of Owl's Head, all in Knox County. And I'm part of AFA also, but I'm down here because it's conformity time.
Good afternoon. I'm Shelley Rudnicki. I represent House District 67, which is Fairfield and Benton. And again, I'm going to shout out all of the boys and girls basketball teams that have made the tournament and are in there and wish them all luck. Thank you.
Hello, I'm Tracy Quint. I represent House District 8, 47 communities in Washington, Aroostook, and Penobscot counties. And I will also say hello to Senator Grahowski's Girl Scouts because it's so great to see young people in the Capitol building. So hello.
Good afternoon. I'm Representative Gregory Swallow. I represent House District 7, which is Holton, Linneus, Ludlow, New Limerick, and Oakfield.
Good afternoon, everyone. Representative Ed Crockett from District 112, which is part of Portland and part of Falmouth.
Representative Russ White, House District 13, Ellsworth, Fletcher's Landing, and Waltham.
Gary Friedman representing Bar Harbor, Lemoyne, Mount Desert, and the Cranberry Isles.
Good afternoon, Bruce Bickford. I represent Senate District 20, which is Auburn, Poland, New Gloucester, and Durham. Yesterday's shout out was to UPS for, making sure everything was okay after they didn't deliver for a week. Today's will be going to FedEx for the same reason.
Mike Tipping, Senate District 8 in Penobscot County.
Thank you all. We also have our committee analyst, Jessica Griswold, here with us, and our committee clerk, Eleanor Ray. Thank you both, especially for the fast moving between the floors with all of our equipment. Appreciate it. So today we are gathered here for a hearing on LD 2010. Just as a reminder, the public hearing is an opportunity for us to hear more about the legislation and take public feedback on the proposed legislation, as well as an opportunity for committee members to ask clarifying and informational questions. We will hold our discussion of the proposal until work session, which will probably be next week, as this does relate to the budget as well. We do take testimony in order of for, against, then neither for nor against, and we also run a 3-minute time clock for members of the public. So with that, I will open the public hearing on LD 2010. This is an act updating references to the United States Internal Revenue Code of 1986 contained in the main revised statutes, and welcome Representative Sayre to kick us off on this bill. Thank you, Representative.
I found the button. Thank you, everyone. Good afternoon. Welcome to Act 2 after a brief intermission. Senator Grahowski, my esteemed friends and colleagues on the Joint Standing Committee on Taxation. As I just said moments ago, I am Dan Sayre, representative for House District 135, the greater part of Kennebunk. I present for your consideration LD 2010, an act updating references to the United States Internal Revenue Code of 1986 contained in the Maine revised statutes. I submit this bill on behalf of the Department of Administrative and Financial Services pursuant to Joint Rule 203. The text of the bill could not be simpler. It changes a single digit from a 4 to a 5. But the impact of that change is very significant. It changes the date to which the state of Maine conforms the Maine revised statutes to the United States Internal Revenue Code from December 31st, 2024 to December 31st, 2025 for tax years beginning on or after January 1st, 2025. This change is significant because the United States Internal Revenue Code was substantially revised in 2025 by a bill officially titled An Act to Provide for Reconciliation pursuant to Title II of H. Con. Res. 14, commonly referred to as the Reconciliation Bill or H.R. 1. In addition to the supplemental budget discussed this morning, LD 2010 presents a vehicle through which the state elects to conform to or decouple from the taxation policies implemented at the federal level in H.R. 1. For the benefit of members of the public present here today, either in person or virtually, I will try to briefly summarize the conformity process. Maine, like most states, uses the federal tax code as a starting point for calculating state personal income tax, corporate income tax, and estate tax. When the federal rules change, like most states, Maine chooses which of those federal changes to accept. This process of choosing whether to adopt the federal changes is what we call conformity. Maine follows a process known as static conformity, also called fixed date conformity, in which we conform to the federal code as of a specific date, except for policies we explicitly choose not to conform with. This is called decoupling, and there are many areas of tax law where Maine currently has already decoupled from federal law. To conform with any portion of H.R. 1, we first need to adjust the date in Maine statute, which is what LD 2010 does. To decide which components of H.R. 1 to conform to is the work of this committee, both in the discussion of this bill and in preparing our response to the supplemental budget proposal that we began reviewing this morning with the Appropriations and Financial Affairs Committee. To proceed with this discussion, I would like to turn the podium over to representatives of the Department of Administrative and Financial Services to recap the conformity portions of the supplemental budget proposal before also hearing from members of the public. Thank you for your time and consideration. I'm happy to answer any questions you feel are relevant to direct to me.
Thank you, Representative Sayer. I think we're all just curious if it'll be another 3 Dan afternoon.
I have not.
We'll find out.
I think we are a Dan-rich environment today.
All right. Thank you very much. It looks like Dr. Allen, you're on the hot seat. Mike at the mic.
The mic's not on.
Oh, sorry.
Dan isn't even my middle name, so sorry about that. But we got 2 Dans back there just in case. So Senator Grohowski, Representative Sayer, members of the Taxation Committee, good afternoon. My name is Michael Allen, the Associate Commissioner of Tax Policy in the Department of Administrative and Financial Services, and I'm testifying at the request of the administration in support of LD 2010. Representative Sayer has done a good job in presenting the bill, so I won't go into part of my testimony this morning. That was recapping all of that, but as he said, this bill updates references to the United States Internal Revenue Code of 1986 as amended through December 31st, 2025. The language is identical to Part K1 of the governor's supplemental budget that you heard earlier today with AFA. As Representative Sayer mentioned, based on our review of federal legislation enacted since December 31st, 2024, the federal government has enacted one piece of legislation with which to conform, and that is Public Law 11921, otherwise known as the One Big Beautiful Bill Act, or OB3. In the individual income tax context, Maine conforms to the federal definition of adjusted gross income, or FAGI. FAGI is the starting point for Maine residents filling out their state income tax return. Any provision of federal law which goes into the calculation of federal adjusted gross income, including most types of income received and most above-the-line deductions available at the federal level, are automatically incorporated into Maine law by virtue of the standard conformity process. On the other hand, provisions of federal law that influence the calculation of federal tax liability after the taxpayer has calculated federal adjusted gross income, including but not limited to so-called below-the-line deductions, tax rates, and tax credits, are not automatically incorporated into Maine law, and unless otherwise directly linked, would be unaffected by a standard conformity bill such as LD 2010. The legislature can and has in the past choose to piggyback off of some below-the-line federal deductions and tax credits if they wish by directly linking to those provisions. Examples of the state conforming to below-the-line deductions and tax credits is the standard deduction and the earned income tax credit, respectively. The administration presented this morning its supplemental budget proposal with respect to OB3 and tax conformity. In addition, as the commissioner mentioned in her testimony this morning, the Office of Tax Policy is working on a consolidated conformity report that will be available at your first work session on conformity to the OB3. This report will provide detailed explanations and estimated revenue impacts of conforming to each of the OB3 provisions that are impacted by merely changing the conformity date to December 31st, 2025. In addition, the report will provide information on those below-the-line OB3 deductions that are of interest to the legislature and Maine taxpayers. Examples are the tip, overtime, senior, and car loan interest deductions. Administration looks forward to working with the committee on this bill. Representatives from MRS are here today and will certainly be at the work session to provide additional information and respond in detail to the committee's questions. Thank you.
Thank you very much. Senator Bickford, go right ahead.
Thank you, Madam Chair. Dr. Allen, the bill, all it says in the bill is that it's a date change.
Correct.
So if it's a date change, what we heard this morning about standard deduction, not being in line with the federal, so we would be decoupling, that's not in this bill, is it? I mean, I'm not sure why we're having a public hearing on a date change.
This is the standard bill that the administration,
Okay.
the department provides to the legislature every year.
Okay,
Usually, in most years, as you know, Senator,
yeah,
Congress may have done something relatively minor.
something
and
simple,
so,
okay.
This year, obviously, that wasn't the case.
All right, good. So we are talking about all of the items that were in OB3 today?
Certainly, the
Okay.
direct conformity items that were discussed this morning,
Okay.
that are the result of changing the date in Part
Okay.
K1 of the governor's budget.
Okay, thank you.
Yes.
Representative Sayer.
Thank you, Madam Chair. I feel like this is a question I should know the answer to, but I do not, and therefore I'm asking you. We have two vehicles dealing with the same policy area, the conformity bill and the budget. Do you have to, then this is further to what Senator Bickford just raised. Ideally, we would address any issue of non-conformity in only one of the two. Has it been practice in the past? I was not here. I think many of us were not the last time there was a major change in federal tax bill, the TCJA of 2017, implemented in 2018. Is it your recommendation that we proceed with this bill as simply the date change and deal with all of the substantive issues in the budget? Or should we be contemplating addressing those issues of nonconformity in this bill, which might then be redundant to or contradictory to what's in the budget?
I think what's happened in the past is when we've been in this sort of situation where there is really substantive changes at the federal level, and the governor has included those in her budget, his budget, based on the fact that they're just large enough that it needs to be part of the whole budget discussion. The committee has had this bill and has held it just in case Congress does do something between now and the time you adjourn, there's another vehicle. Now, that's not to say the governor can't always introduce another bill. I'm sure if Congress did something between now and the time the legislature adjourns, that's fairly substantive. It would probably have to be included in the budget to make it all balanced, but I know that's been the practice in the past, to maybe hold this bill just to the end, just to make sure there's a vehicle, just in case there's a need for it.
Any further questions? Representative Friedman?
I guess this kind of builds on Representative Sayers' question. I deferred some questions in the joint AFA hearing this morning, just out of respect to all those that came to testify. When would be the time to dig into a couple of questions about tax conformity that weren't able to be addressed?
I think if you have like technical questions for main revenue services about what is proposed in the governor's budget as pertains to conformity, now would be an appropriate time to ask those.
May I?
Yep.
Thank you. Dr. Allen, on the appendix table A that was presented this morning, there was a table of conformity provisions. And one of them that I would like to better understand is the permanent renewal and enhancement of opportunity zones. It comes at a cost of 5 million in FY 27, and it goes up to 9.5 plus in 28, 29. Can you explain what the permanent renewal and enhancement of opportunity zones are?
Anybody want to take that?
This was from page 16 of the testimony of our commissioner this morning.
Okay. So my colleague here is going to answer that for you.
My name is Dan Pittman. I'm Associate Tax Policy, something or other at the Office of Tax Policy Council, I think.
You're just another Dan.
Just another Dan. And I'm afraid I can't get into, I'm not prepared today to get into the details of the Opportunity Zone program, but I can say very broadly that it's a federal incentive created, I believe, in the 2017 Act at the federal level that allowed the governors of states to designate certain areas as opportunity zones. And those opportunity zones got various investment benefits, or I should say people that made qualifying investments into businesses in those opportunity zones got particularly substantial tax deferral benefits. The new 2025 Act, the OB3, expands that program and slightly enhances some of the benefits that people will be able to receive for investments in in opportunity zones. But otherwise, it's largely the same structure that it had under the 2017 Act, just with a couple of additional sweeteners. But again, I don't have the details with me in terms of how those work, and I will certainly have that all for the work session next week, and can go into that if that makes sense.
That'd be really helpful. In the footnote, it talks about permanent extension of look-through rule for related controlled foreign corporations, repeal of election for 1 month deferral and determination of taxable year of specified foreign corporations, et cetera. And so just, it would be really helpful to me to understand exactly what that meant.
Sure. Yeah, sure. I think that those are referring more to the international category. I'll take a look at the testimony, but yes, we'll certainly be ready to.
Thank you very much.
Thank you.
Senator Bickford?
Thank you, Madam Chair. So, you come back up? I just want to
ask the question. I'll decide which one of them
Yeah.
should come back up.
I just wanted to follow up on Representative Friedman. Were you just talking about the change between the guilty and the CRC or whatever it's called?
I was not.
Oh, okay.
I'm that's another Dan question, really. That's a Daniel question as far as I'm
okay.
concerned. But I was referring specifically to the opportunity zones, although I wonder if that footnote wasn't at least partially about the international.
Okay, all right,
components.
good. Thank you.
Any further questions, Representative Sayer?
It's going to be a legislator question. You'll catch it in a second. At the bottom of the page 5 of Commissioner Clark's testimony this morning, we heard that with 2 narrow exceptions relating to bonus depreciation, the supplemental budget as proposed would have Maine adopt all of the direct conformity items, although one of them will be phased in over a period of years. Is that your understanding that we're really only looking at those 2 exceptions to conformity that we would have to reflect either in this bill or in the budget?
Yeah, I share some members of the committee's slight confusion about the procedural status of this bill versus this morning's bill. So I'd reserve on that. But yes, I think that the governor's proposal conforms with virtually everything that would be what we define as a direct conformity item, virtually everything that would automatically update in Maine law if you choose to update the date of conformity. The exceptions to that relate to bonus depreciation. The flat out exceptions to that have to do with bonus depreciation and qualified production property, which is very similar to bonus depreciation. You defend because Maine has never opted into those, we'd sort of be required to fundamentally change the way we handle depreciation to incorporate those. The other one that would be affected is the research and development phase in that we talked about this morning, as opposed to doing it immediately. But otherwise, as far as direct conformity items, and certainly some of my colleagues can verify this as well, but there's nothing else that the governor decouples from.
Thank you.
Okay, I don't see any further questions from committee members, but I'm sure we'll have some at the work session. Thank you. We will now take testimony in support of LD 2010. Welcome.
Good morning. Good afternoon. I will not read all of my testimony today. I'm going to read just a few pieces of it and save you from, I know you had a long morning. So good afternoon. Senator Grahowski, Representative Sayre, members of the committee. My name is Linda Caprera. I represent the Maine State Chamber of Commerce. And we are testifying in full support of conformity in LD 2010. Each year, Maine decides whether or not to conform to changes in the federal code. With the passage of OB3, there have been a lot of changes at the federal level, many positive changes that promote economic growth. Overall, conforming to the federal codes creates stability and predictability for taxpayers. The more Maine deviates from the federal code, the more complicated tax filings become, especially for small businesses that don't have large accounting departments. A consistent tax base reduces administrative burden, and using the federal starting point makes it easier both for taxpayers and Maine Revenue Services to administer the system efficiently. The most important provision that our members identified was R&D expensing. R&D immediate expensing is one of the most pro-growth provisions in the federal tax code, and Maine needs to adopt the same federal depreciation rules for these investments to remain competitive. Dozens of states have already made this change. We appreciate that the Mills administration does include R&D expensing in the budget and that it's inclusive of investments that have been made in the last couple of years for small businesses. While we support that provision, it needs to be expanded, we feel. We testified in the budget this morning because we strongly support restoring a deduction tied to R&D expenditures claimed under the Internal Revenue Code 174A is important. But the budget itself, as you know, goes further than that. It adds language to limit it to small businesses, and we support restoring it, the full R&D expensing to all Maine businesses. I'm going to leave you with the rest of my testimony, but that's our opinions on it. We do support full conformity, and again, R&D expensing for all Maine businesses is the most important. And I'd be happy to answer any questions.
Thank you very much. Are there questions from committee members? Representative Friedman.
Thank you, Madam Chair. Thank you for being here. I guess my question is about like small versus large businesses and how these provisions, affect small businesses or large businesses. With all of the various costs that conformity brings, it's challenging to accept it across the board. I'm wondering if you think that there's two questions. One is, how would you define a small business in terms of I think they had like net revenues 31.
31 million or under. Yeah, that's how it's being defined. Yeah.
And you'd
Yeah.
agree that in Maine that is a good demarcation between small and large?
Yeah. I mean, we don't have really an opinion on that, what constitutes, I'm just referencing what's under the code.
Uh-huh.
Yeah.
And the second question then is,
Mhm.
why should we, extend these benefits to businesses that are making more than $31 million a year when we're, so strapped for funds? Couldn't an argument be made that,
Mhm.
that we should focus on small businesses, which 31 million covers a pretty broad range, and let the larger businesses carry their full share?
I think our opinion on that is really it should be available for all businesses. R&D is so critically important to growing our economy today. Innovation's huge. If you're not constantly, if you're not investing in R&D, it's very difficult to grow your business in Maine, and in many cases, and it depends on what businesses you're involved in. But we feel very strongly that they shouldn't delineate between small and large. I mean, if R&D if folks want to invest in R&D, then we should encourage that. And encouraging that is availability, the availability of this R&D expensing, immediate expensing. We feel is very important. Puts money back in the hands of companies so they can reinvest and that they can use that to further their businesses itself. And you heard a lot of that, I think today earlier. It's not just the direct costs, it's the indirect benefits that these businesses have across the state. And that's really important. So.
I guess the
Thank-
one question I have
Okay. Yep.
is, since Maine has historically decoupled from the bonus depreciation, but your testimony said you want full conformity, do you have an actual opinion on a question of bonus depreciation?
I knew I was going to get this. I think we'd love to see full conformity because of it's administratively, it's important, it's easier. And we understand that, there are going to be some instances, and we love to work with this committee on, kind of what should or shouldn't be included. But I think in full conformity, I think, yes. I mean, Maine has in the past not always conformed with bonus depreciation. So, it's one of those things where we wanted to focus our testimony on the most important thing we felt was most important in this. So we don't really have any comments on that.
Okay, so thank you. All right, thank you very much.
Thanks.
Others wishing to testify in support of LD 2010.
Good afternoon, Senator Husky, Representative Sayer, and members of the Taxation Committee. My name is John Block. I live in Portland. I'm a tax attorney specializing in Maine tax law, here representing the Maine Society of CPAs in support of LD 2010, and I will be even briefer than Ms. Caprera. Just want to tell you that CPAs generally love conformity to the extent possible because it simplifies everything for them and their clients. It just reduces the complexity. We already have tons of complexity. Every time we don't conform, it makes it more complicated to do the Maine tax return. Conformity makes things easier, less expensive, reduces the opportunity for mistakes, reduces compliance burdens for both Maine Revenue Service and taxpayers, and generally just makes life easier. We understand that you have to make policy decisions. That's what you do. But just for example, like not conforming to bonus depreciation, which the state hasn't done, that then requires for the state of Maine, every taxpayer having to have a separate depreciation schedule. And in Maine, you get to recover those unconformed deductions over a period of time in the past, like 3 years, 5 years. Other states will do it differently when they don't conform. And so it ends up with a multi-state company having to have 30 different depreciation schedules and things like that. So it's just conformity makes life much easier. Thank you.
Doesn't it take some of the fun out of life?
Well, it's less work for accountants, but they're already overworked. So yeah.
I'm just sitting here contemplating the larger life questions. Are there other more important questions from committee members? Okay, seeing none, thank you very much. Anyone else here to testify in support of LD 2010?
I don't know. Oh, there we go. Hello, I'm Michael Saxel. I'm the managing principal of Main Street Solutions. I'm here today in my capacity as outside counsel to the Manufacturers Association of Maine. This can be very brief also. We support much of the provisions in the budget. We prefer strongly an LD 191, as you heard from a few people during the appropriations process. We prefer the language that we worked on with you a week ago or a week and a half ago, that the Maine Association of CPAs in collaboration with the Manufacturers Association of Maine. We prefer that language a lot. We think it's simpler. We think it's easier to administer. We think it's more beneficial to Maine businesses, and we think it will generate more revenue for the state of Maine, a true win-win. There are strong concerns about the elimination of better and a great deal of interest in if there needs to be reform of waiving better into Betty.
Mr.
And-
Saxel, if
Nope.
you have specific comments around federal tax conformity, we'd be interested in hearing those.
Okay,
Thank you.
just on 191 then.
No, 191 is not part of federal tax conformity.
Pass through entity taxes.
I do not think that is accurate. So R&D expensing, questions like that.
Oh, I'm sorry. Pass through entity tax was part of OB3.
No, that's inaccurate.
No, it was continued in OB3.
It-
Yeah, the salt cap. I'm sorry. I apologize. I defer. I'm wrong. I apologize.
It's
I'll leave.
okay. That's okay. We'd be happy to take any written testimony on the specifics. And we will have LD 191 up for a work session next week, as it does pertain to the larger proposal in the governor's budget around all taxation policy. Okay, is there anyone else interested in testifying in support of LD 2010? Seeing none, we'll take testimony against LD 2010. Is there anyone here to testify neither for nor against LD 2010? We do have one person online, Mr. James Mayel.
Hey there, good afternoon.
Good afternoon, go right ahead.
Great. Hi. Yeah, my name is James Mile. I'm a policy analyst at the Maine Center for Economic Policy. I'm actually testifying on behalf of my colleague, Maura Pillsbury, who you're probably more familiar with, but who couldn't make it today. So I will do my best to answer any questions you have, but some I may end up having to defer. We're testifying neither for nor against LD 2010. We've submitted, I believe, written testimony that has lays out in some detail some of our concerns, and we do have a memo that I think has been made available to the tax committee, but I'm happy to resend it anyone if they have more questions as well. I'll try and hit on some of the highlights that we have. Our main concern is that we worry that a lot of the changes made in HR1 are skewed towards the wealthy and larger businesses, and conforming to the code would create more tax cuts that would do little to benefit Maine's economy, but would instead increase inequality in our state. The accelerated R&D deduction, for example, would allow businesses to immediately expense 100% of their investment rather than spreading it out over 5 years, costing many millions more each year in accelerated tax rates for businesses with gross receipts over $31 million a year. Under the tax, I know you were talking about this earlier, under the Tax Cuts and Jobs Act of 2017, that gross receipts test for what qualifies as a small business was raised from $5 million to $25 million a year and indexed to inflation, which is why we're now up to $31 million a year. Expanding certain tax benefits to businesses that are, in our opinion, some of those are by no means actually small businesses. Further, the R&D tax preferences are typically spread out over multiple years over the time period when the investment actually pays off rather than upfront. Main businesses that can afford significant R&D investments don't need another tax giveaway, and they will still receive the tax benefits over 5 years without this change. We also recommend fully decoupling from the qualified small business stock exemption rather than conforming with its federal expansion. The QSBS is a windfall for investors, giving them a 100% tax break on capital gains up to $15 million for early stage investment in businesses with up to $75 million in assets. Research shows that 94% of those benefiting have income of over $1 million and account for nearly 75% of the gains that are excluded from taxation. Research also shows that QSBS claims are heavily skewed towards high-income taxpayers making large claims. I believe the main revenue service estimate for this expansion would cost $6 to $8 million per biennium. Fully decoupling, on the other hand, could save us $15 million per biennium. We also recommend decoupling from the deduction for investment in opportunity zones. This is yet another program that sounds good on the surface, but it primarily benefits wealthy investors rather than the undeserved communities that it's supposed to support. Research shows that opportunity zones are concentrated more in communities that already receive investments. They are primarily real estate projects that lead to gentrification. They largely don't lead to job creation or economic development in communities, and historically are primarily supported projects that would have moved forward anyway. Maine would still be eligible to participate in the federal opportunity zone program, but we shouldn't be giving a state tax break for this ineffective program. Finally, I'll say that we do support some conformity provisions.
Mr. Mayo, I'm going to ask you to wrap up as you're out of time.
Okay, we support the change from guilty from NCTI. And I would just wrap by saying that we want to make the tax code fairer, and we think full conformity moves in the opposite direction, and instead we should be raising more money from the wealthiest individuals and corporations. Thank you.
Thank you very much. Are there any questions from committee members? Senator Bickford.
Thank you, Madam Chair. I guess my biggest question is you made reference to research and development, making it sound like this is a new approach to research and development. This is actually only 5 or 6 years old, I believe, when they started asking research and development to amortize over 5 years what they spent every year. So that's not an old program. That's a new program. I just want to clarify that with you. And tell me why you consider businesses ultra wealthy. Don't you think that when they spend money on research and development and they don't get to write that off, as you and I would be able to write most anything off that we did under itemized deductions, why would they not cut employees? Labor is the number one area to cut when you're in trouble as a business. So kind of go through that for me, will you please?
Yes, I will. I'll do my best. Yeah, I think my understanding is that many businesses would still be able to claim federal deductions for some of these, and I think the academic research on whether some of these kind of investment or these incentives for extra investments actually tip the balance over whether somebody makes the investment or not, tends to show that in a lot of cases, these investments end up getting made anyway, regardless of whether or not there's a state tax break. I'm certainly happy to relay that back to my colleagues and get you some more information and studies on that. But that I believe is kind of like part of where our stance comes from now.
Thank you.
Are any further questions from committee members? Okay, seeing none, thank you excuse me. Representative Friedman, go right ahead.
Thank you, Madam Chair. There is an awful lot crammed into that testimony, and I'm trying to understand the qualified small business stock exemption. In your testimony, Mr. Mael, you state that it would cost Maine $6 to $8 million per biennium. When I was looking at the commissioner's testimony today, she showed an actual net zero or maybe a very small cost in FY29, $145,000 So I was just wondering if maybe this is a question for the work session, but I'd like to understand more, the discrepancy between your figures and your testimony and the commissioner's figures, which are included on her appendix, table A, page 16 of her testimony today.
Yeah, I had noticed that as well, actually, and I'll confirm. My understanding is we got that in the 6 to 8 million estimate from another MRS source, so I will confirm and try and figure out the discrepancy there because I had noticed that too and was also curious. So hopefully we can figure that out.
Thank you.
Okay, I see no further questions. Thank you very much. Is there anyone else here wishing to testify on LD 2010? Okay, seeing none, we'll close the public hearing on that bill. Thank you all very much for your attention to very complex tax matters today. Just as a reminder, we'll meet again next Tuesday. We have Opega coming to give us a briefing on their 30-day project, which I saw we received in our email today, I believe. So please take a look at that before Tuesday. And then also they'll be presenting their tax expenditure review. I guess it was sort of a shorter review. That's right, Senator Tipping. On the educational opportunity tax credit, student loan repayment tax credit. Yes, I think I got all the right letters in there eventually. So they'll be doing that on Tuesday, and then Thursday we'll begin our work sessions on the budget proposal as well as LD 2010 and LD 191, as they are all related. Any questions or anything I forgot? Okay, thank you very much. Have a great weekend.